Well, hello traders, LA here, and this is your daily Neoclassical TA wrap. We take a look at these markets and we do it through a different lens, and that's the Neoclassical one. What we're doing is we're looking at supply and demand on the charts. We're using that to determine trend, staying on the side of trend most of the time, and using the Neoclassical theory to time our entries and exits. Do the show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. If you want to subscribe and you haven't, just reach up in the right-hand corner, do so anytime I push public content. You'll get a notification as far as what these markets did today. Now, Europe was actually closed today, so these are old quotes here on Europe. But if you look elsewhere, the NASDAQ was the leader again. Oops, that's the Japanese. Let's start again here. The NASDAQ, the leader again, almost 1% higher. S&P basically flat, couldn't do anything. Silver, gold sell off, the bonds sell off, and it was risk on, right? Money back into equities. NASDAQ, Russell got 0.5%. Dow was actually down on the day. So it's the same story that we've seen for quite a while, and that is that the NDX is driving us higher. Folks, if you count it, it's 9 gap up days in a row. Just go back, right? It's 2 weeks straight up, gap up every day. Today you had less volume, May Day elsewhere in the world, so you didn't have a lot of volume here. But it is a clean sweep to the top side on the NASDAQ. NDX in particular, and the NASDAQ on the broader basis here as you see it. Russell got the bounce back up today, of course under back over. That says it can bounce up to the top of the breakdown bar. And if you go over the S&P was flat, doji, inside, 5 days across in a row. Nothing special with respect to those charts. The specialness comes elsewhere, and that is in the large cap stocks. If I pull over, and I'm going to just grab this over here and pull it over on the screen. If I pull over here and I go down and pick up the large caps, and the easiest way, let's see here, the easiest way is just to go into the technology sector and grab that. Actually, what's probably easier is just go into the earnings because that's where most of them are. So let's just pop into the earnings list here that we keep and go to the stocks that are moving this. Now, Apple's going to report tomorrow, so that'll be on tomorrow's stock. But if we'll just start here with Amazon. Amazon big pop up, gives it up. What does it do? Takeaway bar right back up the other side. If we move over to some of the other ones here like Google, let's go down to Google stock. And I'll pull this off the screen here. Let's just go to Google, and you can see what Google did. And then you can go to Microsoft. Google gap up today. It's a takeaway back the other way. Microsoft, let's look at Microsoft. Now these are all the heaviest weighted stocks that are out there. And you can see the same thing here, Microsoft continuing higher. Intel is another big weighting. Intel is the one that did sell off on its earnings news. But then today it actually tried to reverse and head back the other way. If you go to what was driving it today, that's on the earnings that are coming up tomorrow, which is Apple. And Apple, the largest weighting across any of the indexes. It moves all the indexes anymore. I think it's about 3% of the S&P. If you take a look at Apple, Apple shoots up, volume comes in, breaks a swing point high in front of earnings. So clearly they're thinking good things here at Apple. And what's the other one? Facebook is coming up the next day, and that's the other big one that's been moving things. And if you take a look at Facebook stock, look at this rise, this meteoric rise in front of earnings. Folks, these are what's driving this market. It's a very simple formula. Every day, 9 days in a row, NDX gaps up. And it's held all at one. That is what's pushing these index. That's what keeping these index at the highs. Today you actually had more stocks lower, right, 52-week lows on the NDX than you had, I think it was like 2 months ago when there was when price was 20, not 20, but it was quite a bit cheaper, 4 or 5, 6%. Oh, it actually had to be more than that. It's probably 10% cheaper. That's a reflection of these stocks. These stocks are moving the market. These stocks are pulling the market up, but yet they're unable to take the broader non-tech sector of this stock market higher. And of course, I'm talking about those stocks in the S&P 500 and even in the Russell. But there are places to play. I mean, when the market's bullish, you want to try to play on the bull side, right? It's a trend. You want to stay with the trend, the wind at your back. I shared this with members today. Now, it's a services now. This is the setup on this particular stock. This is the sort of things I share with members as they come available, and the setups are there. I shared another one last week with what was the stock? I forget which one it was, but draw these up, show the members where the stops are, where the buys are, and the expectation of where this thing's going to go, so that they can make trades. There's trades to be made, and you have to make the trades that are out there. If you want to chase technology, be my guest. That's up to the individual preference and how much you want to take in terms of risk, and whether you're a retrace fade type trader or whether you're a momentum trader. And right now, this is pure momentum, folks. These angles of ascent will not stand. They will come back, right? When you're doing this and then you go vertical, it just doesn't last. So as these earnings come out, we'll probably see these things come back down to earth. The good thing, if you're bullish, the good thing is that the NASDAQ, the NDX, has done exactly what you wanted to do. I'm going to pop back over there and show you. And that is that they have pulled away. When they broke out, they've actually pulled away off that breakout. And that's exactly what you want, right? Because now when they finally come back, right, they're almost certainly going to be bought. And so this market is not going to roll over and just, go belly up. It's just not going to happen. What you're going to see is when the rollover comes, you're going to see the buyers come back in again. They're going to buy the dips. The problem for the indexes is that you don't have the participation, the wide participation across the board. You got a lot of money chasing a few stocks. If this one doesn't break out this week, and I'm talking about the S&P 500, if it can't break out this week and it still can't get over this swing point high, then you're going to see this roll back over. NDX, NASDAQ's going to roll back in, and then they're going to come back into this area and probably buy this one just like they buy the NDX and the NASDAQ. And that's the setup. Either they're going to take them higher or they're going to bring them right back down. And it gets harder and harder to keep going straight up with the same 7 stocks. Have yourself a great night. I'll see you next time. Take care. I'm LA. This is your daily NeoTA wrap. Good night, folks.